Okay, so this next video lecture is about our module number 7. So this is entitled The Conversion Cycle. So here we will be talking about the traditional manufacturing environment, the world-class companies and lean manufacturing, accounting in a lean manufacturing environment, and the information system that supports the lean manufacturing. Okay, so to start with, let us discuss about the traditional manufacturing environment. So we have here in this illustration the conversion cycle. Okay, so we will relate it with the other cycles that we have discussed before. So when we say conversion cycle, basically this is the transformation of the raw materials with the help of or applying of the labor and factory overhead, okay, to transform this into finished good or finished products. So basically, conversion cycle will need the help of the marketing system because what the entity should produce should be equal or should meet at least the demand of the customers. So that's why they need the sales forecast analysis or data. Okay. When it comes to conversion cycle, converting or transforming raw materials, labor, and factory overhead into finished goods or finished products. So basically, the entity needs capital, okay, to spend for those input. Okay, so that's why in this case, expenditure cycle is somewhat related also with our conversion cycle in terms of the purchase of the necessary materials and payment of the labor and factory overhead. For the sales revenue, of course, whatever the entity have produced, okay, so that will be used as the inventory for sales. Okay, so this is where the entity actually generate their revenues. And when it comes to reporting, of course, conversion in conversion cycle, the transactions that relates to the raw materials, direct labor, and factory overhead, to the work in process, to finished goods, to cost of goods sold should be recorded in the books of the entity. So this is how conversion cycle is related to other cycles. So we go now to the traditional manufacturing environment. So here, basically, production. Okay, so as mentioned also in the illustration earlier, this is triggered by the customer's order, okay, from the revenue cycle or by the sales forecast coming from the marketing department. So again, the entity should make sure that at least what they produce is able to meet the demands of the customers so that they will be able to generate income and avoid as much as possible losses. Okay, so there are 3 production or manufacturing methods in a traditional manufacturing environment. So we have first the continuous processing. So this creates a homogeneous product through a continuous series of standard procedures. So under this processing or production method, the firm will attempt to maintain finished goods inventory at levels needed to meet the expected sales demand. Okay, so that's why it is considered to be continuous because here their product is homogeneous or less or they only have, for example, one variant or lesser differentiation. So that's why it goes through a continuous series of standard procedures. The second type of production method is make to order processing, or this is what we call in cost accounting job order. Okay, so this involves the fabrication of discrete products in accordance with customer specifications. So this process is initiated by sales order rather than the depletion of our inventory level. In a continuous processing, once the inventory level or the finished goods inventory level is low, so that is the time that they will produce, okay, so that they will maintain their desired level of finished goods inventory level. Whereas in make-to-order processing, this is only, or the goods will only be produced upon the request or the order of the customer. Okay, and another is the batch processing. So here, in batch processing, the entity will also produce discrete groups or a batch of products. Okay, so each item in the batch is similar, and this requires also the same raw materials and operations. So this is the most common method of production in most manufacturing entities, batch processing. So they do this to also lessen their cost of producing those goods. So those are the three manufacturing or production methods under the traditional manufacturing environment. So what are the basic processes that involves here? Okay, so it includes planning, of course, and controlling of the production, especially the cost. Okay, performing production operations. Okay, so this is, of course, to make sure that they are effectively and efficiently using their limited resources. Another process is to maintain also the desired inventory control, okay, when it comes to the cost, okay, especially, and perform cost accounting. So this will help them in maintaining inventory control and planning or controlling the production. So for the documents in the batch processing model, okay, because we have mentioned earlier that this is the most common production method. So in this case, we will have the production schedule. Okay, so in this document, basically this is a formal plan and authorization to begin the production. So basically there should be an authorization, okay, before the process should be started. Okay, so this is, of course, to make sure that what the entity is producing is only for the purpose of achieving their objectives, okay, to avoid any losses or fraud or errors. So our production schedule will describe the specific products to be made, the number or the quantities to be produced in each batch, as well as the manufacturing timetable for starting and the completion of the production. So this is what our production schedule will be showing. So we also have in the traditional manufacturing BOM or bill of materials. So in BOM, this will specify the types and quantities of raw materials, okay, and sub-assemblies that is being used in producing a single unit of the finished product. So our raw materials requirement for an entire batch, so these are determined by, we will multiply the bill of materials by the number of items in the batch. Okay, so that's how you will determine the raw materials requirements. So aside from the bill of materials, we also use route sheets. Okay, so this will show the production path that a particular batch of product will follow during the course of the production. So this is similar conceptually to our bill of materials. Okay, however, in bill of materials, it specifies the material requirements, while the route sheets, this specifies the sequence of operations. So basically, they focus on machining or assembly, okay, and at the standard time as well, okay, allocated in each of the assigned task. So another document, okay, that is used in the traditional manufacturing is the work order, or this is also known as our production order. So basically, your work order, this was drawn from our bill of materials and route sheets. So here, it will specify the materials and production, the machining assembly, and so on for each batch. So this together with move tickets, Okay, so move ticket will be described in the next paragraph. So this initiate the manufacturing process in the production department. So this is used also as a source document. What about move ticket? Okay, so we've mentioned this earlier under the work order. So move ticket, this will record our work done, okay, for each work center, and this also authorizes the movement of the job or batch from one work center to the next. Okay, so move ticket, that's why it's called a move ticket. So it tracks the transition or the transfer of the product from one department to the next. Okay, another is materials requisition. So you are familiar with this already. So this will authorize the storekeeper to release materials that is being requested to be used for production. So this document usually specifies only standard quantities. Okay, so materials needed in excess of the standard amounts, this will require a separate requisition that may be identified explicitly as excess material. So of course, this is part of the control procedure of the entity. So this will allow for closer control, okay, over the production process. So in some cases, there are less than standard amount of materials that is being used in the production. So when this happens, the work centers will return the unused materials to the storeroom. Okay, so this will be accompanied by materials return ticket to monitor the return of the excess requisitioned materials. Okay, so production planning and control function. So basically, we have two main activities. The first one is materials and operations requirement, and the other one is production scheduling. So under the materials and operations requirement, so for a batch of any given product, this is the difference between what is needed and what is available in the raw materials inventory. So a product of this activity is the creation of purchase requisition for any additional raw materials that is not available in the storeroom. Okay, so this is how materials and operations requirement, okay, functions. For production scheduling, of course, in number one, I would like to add also that this is to monitor the usage of our raw materials, as well as to evaluate how productive it was used in the production, and also to make sure that the entity will avoid stock out, okay, to also avoid delays in the production. For production scheduling, so this is the second activity, okay, for our planning and control function. So the master schedule for a production run, this will coordinate the production of many different batches. So the schedule is influenced by, of course, the time constraint of as well as the batch size and any specifications derived from the bill of materials and the route sheets. So the scheduling task also produces work orders, move ticket, and materials requisitions for each batch in the production run. So this is very important so that the entity will be able to track their pace of production, okay, whether they are in schedule or over their schedule, or is the production run fast, okay, to meet the deadlines. Okay, so this is the another importance of our production scheduling as well. So the actual production operations, of course, this will begin when workers obtain raw materials from the store keeping in exchange for materials requisition. Okay, and then after that, the work centers will also fulfill an important role. So they will be recording the labor time costs. So this task is handled by work center supervisors, who at the end of each work week, okay, they will send employee time cards and job tickets to the payroll and as well as to cost accounting departments respectively. So this is to account for the direct labor applied in the production, as well as in recording the wages payable to the workers. So under this, we have the inventory control function. So in the inventory control functions, of course, this will follow, okay, with the requested materials to be applied in the production. So it consists of three main activities. So for inventory control function, of course, the entity or this one will provide production planning and control with status reports on the finished goods and raw materials inventory. So the entity will determine the level of their inventories. Another is inventory control function is continually involved also in updating the raw materials, inventory records. Okay, so it will show the materials requisitioned, any excess materials that was requested, and materials returns. Okay, for those which are requested for more than what is needed in the production. So another is upon receipt of the work order from the last work center, so the inventory control records the completed production. So they will update our finished goods inventory records. So this is how inventory control functions in the production department, okay, or production of the entity, their goods and services. So what about the objective of inventory control? So of course, its objective is to minimize total inventory cost, while ensuring that adequate inventories exist to meet the demand to avoid delays and losses. So here, when should the inventory be purchased? How much should be purchased? So this is very important questions, okay, for achieving the goal of inventory control, okay, for the entity. So these questions will answer on how to minimize our total inventory cost, and of course at the same time to ensure that inventories or the level of inventory that is present in the storeroom is able to meet the current demand of production or for production. So to answer this, we have an inventory model that is commonly used. So I think you are familiar with this. This is what we call economic order quantity, or EOQ model. So your EOQ model, so here, the demand for product is constant. So these are the assumptions that we will use in EOQ. So the demand for production is constant and known with certainty. Okay. Second, our lead time, meaning this is the time between placing an order for inventory and its arrival, is also constant and known. Okay. And under EOQ, all inventories in the order arrive at the same time. The total cost per year of placing the order is available, or variable, that decreases as the quantities ordered increase. So we all know that if the entity will order in bulk, so they will be enjoying of or availing of the discounts at the same time. So that's why as their quantities increase, their order cost or placing the order cost will also decrease. Ordering cost, on the other hand, this will include the cost of preparing documentation, contacting the vendors, processing the inventory receipts, and maintaining vendor account and writing checks for payments of the order. And another assumption is the total cost per year of holding or carrying the inventory, meaning storing it once it arrives in the premises of the entity. This is a variable cost also that will increase as the quantity ordered increase. So of course, if there are a lot of inventories that was ordered, so you need to have a bigger space to accommodate it. So for example, if the entity is just renting the space, so if they need a larger space, so they will add cost for it to accommodate larger amount or quantities of inventory ordered. So these costs include opportunity cost that they will invest those funds but it was tied up in the inventory, storage cost, property taxes and insurance at the same time. So those are the total cost of holding the inventories. Okay, another is or another assumption under the EOQ is there are no quantity discounts. Okay, and therefore the total purchase price of inventory for the year is also constant. So here, the objective of the EOQ model is to reduce total inventory cost. So this is the very essence of using this model. Okay, so here we also or in EOQ, reorder point is usually expressed as lead time I mean multiplied by the daily demand. So this reorder point will be the level of the inventory in which the entity should already place an order from the supplier to avoid any stock outs. Okay, so that is reorder point, or meaning at this inventory level, this will signal that the entity will order the inventory already. Okay, so additional inventories called safety stock also should be added to our reorder point. So the purpose of this is to avoid stock out. So stock outs, because this will result either in lost sales or back orders. Okay, so what is a back order? So a back order is a customer order that cannot be filled because there is no enough inventory or stock out, and will remain unfilled until the supplier receives the replenishment of their stock. So cost accounting activities also are involved. Of course, the conversion cycle record the financial effects of the physical events that are occurring in the production process. So the cost accounting process for a given production run begins with the production planning, of course, and control department will send a copy of the original work order to the cost accounting department. Of course, there are deviations from standard usage and recorded to produce material usage, direct labor, and manufacturing overhead variances. So there are 6 general classes of internal control activities. So we have the transaction authorization, segregation of duties, supervision, access control, accounting records, and independent verification. So these are the same with our previous cycles, as in the revenue and expenditure cycles. Okay, so here the traditional manufacturing environment consists of a range of different types of machines also. So these are controlled by a single operator, or this can be, controlled by a single operator or more. Okay, so islands of technology. So this describes an environment in which modern automation exists in the form of island, meaning that stand alone within the traditional setting. Okay, so here, meaning because of this technology, the entity can only have a single operator for the different types of machines. So the islands of this island employ computer numerical controlled machines, or CNC. So this will perform multiple operations with little human involvement. So that's why it's called an island, because it can stand alone on its own. So CNC machines contain computer programs for all parts that are manufactured by machines. So computer integrated manufacturing, or CIM. So this is a completely automated environment with the objective of eliminating non-value added activities. So automated storage and also retrieval systems. Okay, so these are computer controlled conveyor systems, which carries raw materials from stores to the shop floor and finished products to the warehouse, meaning there is already automation. So manufacturing robots. So these are programmed to perform specific actions over and over with a high degree of precision, okay, and are widely used in factories to perform jobs such as welding and riveting and others. So this is also to manufacture fastly, okay, and to avoid error. Okay, that's why they utilize robots or machines. Okay, so they are also useful in hazardous environments, okay, or for performing dangerous and monotonous tasks that are prone to causing accidents on human if they were the ones who are performing it. So with the help or the aid of robots, they are protected, and lesser harm, okay, will be experienced by the entity. So engineers, they use computer-aided design or CAD to design better products faster. Okay, and this system will increase also the engineers' productivity as well as improving their accuracy by automating repetitive design tasks. And it will also allow firms to be more responsive to market demands because they are acting fast with the aid of technology. Okay, so those are the revolutions or the developments now in the traditional manufacturing. Okay, so this is the first part of our module. So we will continue with our next discussion in the next video lecture.